All right, what's going on, guys? Warrell Thomas, residential real estate agent serving the Metro Atlanta area, and I'm with.
Kenneth Francis, loan officer with Mortgage Depot, serving Georgia, Florida, New York, Tri-State. Let's get it.
That's what's up. That's what's up. So, glad we was able to come together today. You know what I'm saying? I think what we're about to talk about is great for anybody who's looking to purchase a home, but they may not be looking for their dream home yet, but maybe not want to rent anymore, right? Yeah. We know in Atlanta, the pricing is getting a little tough, right? Finding homes under 300,000 is getting a little tough, like move-in ready homes that people want, right? So today, I just want to be able to highlight what that process would look like. And I think, this example that we're in right now, we had an open house today. We're in East Point. The example that we're in right now is a renovated home, about 1,200 square feet, just a little over 1,200 square feet, 3 bedrooms, 2 bathrooms. Perfect starter home for someone, right? Yeah. But I think in this situation, before this house looks like it is now, definitely needed a good bit of work, right? So new floors, of course, new paint, maybe a couple windows. And if somebody's coming to purchase a home and they're already using their money as a down payment, right? It gets a little tough for them to figure out where's the extra money going to come in for me to fix this up.
Yeah, exactly.
So, there's renovation loan products out there that's going to make it easy for people to be, or easier anyway, for people to get a home. It may not be exactly what they want, but allow them to do the work that they want to do to it to get it to the point to where they can say, you know what, I feel good about moving into this house, right? So let us know a little bit about the different products that might be out there to help someone with that.
Right, definitely. So one of the main programs, and like what we spoke about with this type of property, would be a 203K loan, right? So there's an FHA program, a government program for owner-occupied homes. So it's great for somebody who is, like you said, currently shopping but being priced out of other markets. There's a lot of bidding wars and everything as we enter the spring market, much more traffic and everything. So with the FHA 203K, you can purchase or find a home that has probably been on the market for a little while that needs like some work, whether it be a new roof, a new kitchen, flooring, bathroom, or whatever, and finance the renovation cost into the loan.
Okay.
Right. So it's a great program, like to be able to turn, say that rundown or not so like an elegant, beautiful looking property into your dream home or that first home.
Okay. All right. Cool. So I guess the house that we're in now, like this would be a great location for that.
Definitely.
East Point, we see a lot of this going on, right? A lot of renovations, a lot of flips. I mean, we have one going on literally 2 doors down, right? Yeah. So I think it's pretty cool because around here you would see houses that need some work, right? And then now you have an example here of one that was done. I think it's just uncovering how do you get from point A to point B. So you're saying that there's renovation loan products that will allow someone to purchase the home and finance the work that they need to be done as well.
Exactly, yeah.
Okay. So what does that look like, say, down payment wise, right? I'm already strapped for cash, and I know that, I can get away with, you said FHA, so I can get away putting 3.5% down. Is that the same with the FHA 203K?
Yeah, so with the 203K, it's the same as long as you're up underneath the county loan limits. So you want to, and the county loan limits vary like county to county, state to state and everything. If you're in a higher priced area of the country, then like FHA will obviously allow you to purchase more and everything, right? Or qualify for more. So you just want to look at the county loan limits, and then basically it's 3.5% down whether you're purchasing a $100,000 home or $420,000 home, right? It's still the same 3.5% down. And you're able to finance the renovation costs into that property, as you mentioned.
That's what's up. So I guess with me being a realtor, right? How do I help my client? So we find the house. All right. They say, you know what? I wouldn't move into this, the way it is right now, but I like the bones. I like the layout of it. It just needs some work, some lipstick work, maybe some paint in the floors, just like this one.
Yeah.
Right. So if I'm looking into that, say the house is on the market is $175,000. Is that what I'm going off of, or?
No, so you would be going off of what the after repair value is. So whatever you envision, and not only what you envision, but also you're going to have a team, right? So like depending on whether it's the limited program or the standard, you're going to need a HUD consultant. You're going to have contractors. You're going to have the lender, and the three of us are going to come together and like kind of map it out and see based on like the properties in the area, what is it going to appraise for? Because that is going to be what your loan is based on. So when the property is done, after all the remodels, after you slap lipstick on the pig and now it's a pony, that's what the property is going to be based on, the value.
Okay. So I would have to be pre-approved for the after repair value.
Yes.
So
Correct.
if right now the house is 175,000, but I do the work to it, and then it's going to be worth 250,000 at that point, then I need to be pre-approved for 250,000, not
Correct.
the 175.
Correct, because we're financing those repairs into your loan, so you're getting approved for the 250.
Got it. So now I know as a realtor, I need to be talking to my clients to say, hey, look, if your pre-approval is 250, maybe we need to look a little bit lower, and then we know we have that kind of cushion there
That buffer,
for the renovation loan.
Yeah, definitely. Another thing you mentioned too was the structural repairs and everything. So they can, like FHA to 203K, you can actually fix structural damage with that loan program as well.
Oh,
so
okay.
that's something that's not like really necessary or available with other loan types, right?
Yep.
Yeah.
So I think that's actually really good, because like a lot of areas that we go in, like a lot of these homes in East Point here, right, built in like the 1970s, maybe 1960s.
Exactly.
I believe this one was built in 1952.
Yeah.
Right. So it's not unheard of for structural issues to come up on homes like these. So I think that's really cool that you can use a product, take care of the structural issues. The bank is, kind of willing to take that risk, you know what I'm saying, to have something that has structural issues. But I guess it's all depends on the contractors you're using, and everything like that. Okay. So is there a limit in regards to like